Hello, welcome back to Global Weltrade Synthetics Signal Provider YouTube channel. If this is your first time of visiting this YouTube channel, do your best to subscribe and turn on the notification so you get notified each time I upload new content. Try to share this channel with your network so that you can have a high level of audience. In today's video, we shall talk about why trend lines fell in Forex synthetic trading. Why trend line fell in Forex synthetic trading. You know that trend line is a geometrical tool in mathematics that is used to measure the slope of that line. Okay, so a trend line trend it actually measures the steepness of a particular action, whether the action is downwards or whether the action is upward sloping or downward sloping. So when you are trying to use trend line, in most cases, the sloping characteristics of the market does not guarantee a I'm sorry, a steady state behavior. So if market is trending downward, there is no guarantee that it will keep trending downward or it will reverse. And if market is trending upwards, there is no guarantee it will keep trending upwards or it will reverse. So there is a lot of chaotic probabilistic problems here. So before I go to the practical part of this video, I will start with theoretical part. We start with an illustration. Okay, so let's start with this. So if we have the P axis and we have the T axis, the P axis is the price, okay, and this is the origin. So if the market shows a behavior of this type, okay, then based on independent theory, you discover that a sell part is independent of a buy part, meaning that an upward action is independent of a downward action. So this is what we call a trend line, TL. This trend line is acting at an angle theta to the time axis. Okay, so the angle between the trend line and the time axis is the characteristics of the trend line, and the tangent of this angle is equals to the slope or the gradient or the PDT of the action. Okay, and the direction, because for tangent of angle between 0 and 90 degrees, it is always positive, and for tangent of angles greater than 90 degrees, it is always negative. So if the tangent is between 0 and 90, if the angle theta is between 0 and 90 degrees, the market is trending upwards. If it is more than 90 degrees, the market is trending downwards. Okay, now using the independency theory, if a market is trending in a given direction, it has two components. One is reverse action, which is the correction or retracement, and the other one is impulse action, or which is the MEM action. Okay, now if this independence theory is deployed, you'll be able to understand why the trend line fell. Actually, the independence theory makes the trend line to fail. Okay, in most cases, like the trend line has 80 to 90% probability to fail. Think about it, 80 to 90% probability, meaning that you can actually become successful trading trend line strategy with 10% success rate or accuracy. Okay, see the reason. I'm going to explore I'm going to define this reason using independence theory. Now, this is the P axis and this is the T axis. This is the origin. Okay, so if a market is to travel or move from certain fixed point, say from this point to this point, you see that this destination point is at some higher prices, so it have to follow a trend line procedure. It have to define, uh, it have to describe an uptrending market, okay, using an uptrend line. So it first of all try to go up and fall, range a bit, go up and fall. Most time range a bit and then go up. Okay. Now let's actually get this thing right. Okay. So it go up, fall, range a bit, go up, fall, range a bit, go up, and then it start falling. This is where a lot of people is going to lose money. This, let's define the trend line. Let's define the trend line. Okay, so when the price is falling towards this session, a lot of people would like to start buying. A lot of people will start buying because they anticipate that the market will go up, so they start buying, not knowing that independency theory is always activated, is always active along any path. So the market will keep going down like this. Okay, two things will happen: the market will can break the trend line, okay, and still reverse and go and go in the impulse direction, or the market can create a fake out and still reverse and go in the impulse direction, or the market will entirely break the trend line and create a new trend. So I'm much more interested in the situation where the market creates a new trend. So when it creates this new trend, a lot of people will lose money because many people will keep buying. They will say, "Oh, it break the trend line, so it hit my stop loss, so let's buy more and change the stop loss." Maybe it's going to buy, it's going to think wise and buy. The market doesn't think wise. The market doesn't think the way you think. Once it is following a given path, the independency theory gets activated. So for you to actually understand this thing, you have to know what is independency theory. The independency theory means if a market is selling, then it is selling indefinitely until it changes direction. And if a market is buying, it is buying indefinitely until it changes direction. Okay, so what it is this: because it's selling along this path, you dare not come and think it will buy here. No, you have to test for change of trend at this session, because the probability there are more than two. There is probability of break of, there is probability to keep selling, there is probability to create a fake sell and create a buy, there is probability to actually buy. So the probability for this market to maintain the trend is low because of independency theory. It's going to be low because of independency theory, and so the probability for it for the trend to change is very high than the probability for the trend to keep going. So that is where you need to pay a lot of sacrifices. It's going to stress you to get actually know when the trend is still active and when the trend is about to change direction. Okay, so the next section of this video will be to the practical part to see examples of these things. Okay, right now we are going to practical to learn why trend line fell in trading. Okay, right now let's consider this market. Uh, which shall be considering SFS 40 index plus let's get some time frame that is cool. This is a 4 hour time frame. Okay, let's see if we can get some sort of trend line that we can use to study why trend line fails. Okay, okay, look at this. We have this pretty trend line. This is a pretty trend line. You see, we have touch one. There are multiple touches there, but we are going to take it to be one. Touch two. Okay, touch two, and we have touch three. Well, you can see what's happening here. On this touch three, the market bought a bit because this is uptrend, so we're expecting buy market. The market bought a bit and then range, range, and then fake the buy to sell and then buy again. So you see a lot of ambiguity when you are trading, when you are trying to use trend line to enter the market. Okay, so the third one is not really, it didn't give accurate prediction. Okay, and then we also have the fourth one. So this is where a lot of people fail during the fourth reaction to the trend line. When the market is reacting on the fourth time on the trend line, a lot of traders will start putting a lot of buy orders. I mean, during upturn market, you'll be placing a lot of buy order here. But look at what market did. The market actually confirmed independent theory that this trend line can never reverse this market because the sell is independent of the buy you want to place. So instead, the market break the trend line, maintaining the sell characteristics of the market and sold as much as it can until it decide to change trend at this session. You see, it change trend and then start pushing higher. This is when you should have looking for buy because the market is done selling. And structurally, you're supposed to know that this is a very strong support level. So anytime price come to this support level, it will grab liquidity. It will do what? Grab liquidity and push higher, and that's what's happened. So if you are using trend line, you will actually be affected by stop loss hunt and liquidity sweep issues. You'll be affected by liquidity sweep problems. Okay, look at this live market now. We have this touch one, touch two, and touch three. You see what's happening here? This is touch one, this is touch two. Even though there are multiple reactions there, but it is taken to be one because they are almost at the same distance. This is touch three. So the fourth reaction and beyond is where people fail. Okay, so you're now trying to take a buyer because it reacts to trend line. It's a massive loss. So the market break the trend line, a pullback happen, it break the previous low which is here, and then start going up again. So if we will confirm, if we will get a buy, then the market have to re-enter the trend line and stabilize this on it. Like it have to create a strong support within this trend line, not outside it. You taking a buy here is risky because the market will just push high, lose stability, and sold massively. So I'll be ending this video. Make sure you are proactive. Make sure you leverage our made for you services. You don't need to stress more in this. This is our duty, okay? Yes, you can get knowledge, you can learn, but to build your equity to level where you can now depend on your own, subscribe to our VIP signals. You go for our courses and mentorship. Make sure you change your life. Make sure you do what? Make money with us. Copy and paste our trade in real time. We're actually on copy trade platform of Weltrade Market. So you can search for Jewel Centers Signals. Jewel Saint S signal. So this is the spelling. Okay. This is the spelling to join us. G is G. This is spelling for G. Jewel Syntax SYNTS Signals. Okay, this is our copy trade name. Search for it and then register. Okay, make sure you have all the conditions to sign up with us. Thank you and bye for now.